Welcome to a midweek market brief special. I'm Caroline Woods and I'm joined by David Kelly. He is Chief Global Strategist with JP Morgan Asset Management. David, great to have you with us.
Glad to be here.
So I want to start by talking about markets. We're, of course, coming off a brutal month and quarter, one of the worst on record. So I want to talk about your expectations for April and the second quarter. Have we seen the worst of it yet, or is there still more pain to come, David?
There could be more pain to come. I mean, I think if you're trying to trade the market day to day, I've got not much confidence that we've seen the low. We could well see a lower number on, say, the S&P 500. And I think the reason for that is we're still capable of being shocked by economic numbers, and I think we're still capable of being shocked by numbers about this virus. I mean, we still have not seen huge mortality numbers in the United States, and unfortunately, I think that is coming. And then this is having a truly dramatic effect on U.S. employment. So I think that, for example, the unemployment report that comes out on May 8th for the month of April will be a historically bad report. So I think markets could still get shocked here. But for a long-term investor, that's really not the question you should ask. I think the question you should ask is, are today's prices reasonable given the long-term outlook? The key thing about this recession is it's a very weird recession. I mean, every recession is different, but this is particularly weird because it's a fall, a stall, and a surge. Now we know that we've obviously fallen into this already, and we're waiting for the numbers on that. And I don't honestly think this economy is going to get going in any significant way until we have a vaccine, because the problem is that even if this virus is contagious enough and deadly enough that if we all relax because the numbers go down, then the numbers are just going to go right back up again, and we're really not going to be able to get back to normal until what I would call VC day, which is Vaccine for Coronavirus Day. And when we all line up in outside CVS or Walgreens and get the vaccine, then we can get back to play. But that could still be a year away. At that point, though, the economy will absolutely surge, and we know that. And that's why I think it's really important to think about, okay, 2020 is the year of the virus. 2021 is the first year of recovery, but let's look at 2022 and beyond that. And if you look at it from that perspective, there's nothing to stop the economy from really getting back to full employment and for profits to get back to their old high in 2022. And that's really why I think you can be a long-term optimist while still being having a relatively pessimistic view on the virus and the economy in the short run.
But when you talk about a mid-2021 surge, I mean, that's assuming that businesses are still viable at that point, that consumers can spend money and prop up the economy. I mean, an extra $600 a week is good in unemployment, but it only lasts for 4 months. It doesn't bring us until next year. So how can you be confident that we'll see that surge?
Well, let's talk about both sides of this. So first of all, on the consumer money issue, I mean, this stimulus bill was $2.3 trillion. And to be honest, I think a lot of that money is wasted. But the money that is the sort of $600 billion, which is aimed directly at consumers, I expect that's not enough to last all the way till next year, but they'll come back with more. I mean, there's going to be supplementals, I'm sure, and further stimulus packages. Basically, what we're trying to do is break the relationship between unemployment and poverty. We know we're going to suffer unemployment, but so long as we don't impoverish people, then people will have the ability to go back and spend money when there is actually something to spend money on. And as for reopening businesses, these are not complicated businesses for the most part. I mean, how hard is it to reopen a restaurant? I mean, even if you, unfortunately, as a restaurant owner, went out of business, somebody else is going to see that restaurant space and say, well, I can open a restaurant there. I just need a little bank financing. But everybody's going to want to eat seafood again. They're all going to come back to the mall. So let's just reopen the restaurant. And there are a whole pile of workers here. We know who they are, who used to work for us. So let's hire them all back, and we'll be open in a few months. And I don't think these businesses, for the most part, are that difficult. We know what the airline routes should be. We know what the hotels are in the right locations. Have to do a lot of dusting off, but basically we just get going again. So this is not that hard, I think, to actually restart the economy in these businesses.
All right, David, we have to leave it there. David Kelly, Chief Global Strategist with JP Morgan Asset Management. Thanks so much for joining us. Really appreciate your insights.
Anytime. Glad to help.
And that's your midweek market brief. Take care. We'll see you on Monday.